Hello, and welcome to another Market Snapshot webinar. My name is Rufas Kamau, Markets Analyst at FX Pesa. So if you have any questions or comments, feel free to type them in the comment section. So as you all know, today being Tuesday, there is quite a number of things that you'll be expecting in the markets. There is quite a number of highlights, including the Brics Summit in South Africa, the oncoming Jackson Hole Symposium in the US, and of course, a couple of items on the economic calendar, as well as earnings. So good morning, Patrick, Emmanuel, Mercy, John, Philip, Kevin. You can see there is Isaac, Joseph, Richie, and Ruben. Thank you guys for joining the session. Always a pleasure having you here. So let's begin with the key and most important things for the day. And this can be identified right from the economic calendar. So from the economic calendar, you'll notice that we had inflation data coming from Japan. This was earlier on in the morning, and Japanese core inflation has really gone up to 3.3% annually from the previous reading of 3.0%. And this is adding more pressure on the Bank of Japan to consider changing policy. So from what we are seeing here, right from the bottom, somewhere around May 2021, inflation has been consistently rising year over year, and the current reading is a big spike from the previous average. So the last couple of months, we were averaging around 3.0%, and now there's a big jump towards the upper side, 3.3%. And this basically adds more pressure on the Bank of Japan to basically reduce the quantitative easing and considering entering a quantitative tightening cycle. So for now, it remains even more pressure, indicating that the Japanese yen is continuing to weaken against other currencies with the current policy. So besides these, there's more data. We had trade balance from Switzerland coming in at 3.13 billion. This is a slowdown from 4.82, the previous reading. And of course, less than expected for 4.5 billion. Public sector net borrowing really weakened in the UK, came in at 3.5 billion pounds compared to the previous reading of 17.1 billion pounds and an expectation of 3.8 billion. So the current account in the Eurozone showed an expansion, meaning that the Eurozone is becoming a net exporter. And in this reading, we had 35.8 billion compared to the previous 9.1 and an expectation of 10.2, indicating that business in the Eurozone is expanding. So if you look at previous data points, you'll notice that there were some times when the Eurozone was basically contracting, especially in September, October, November, through to December last year. But this year, we have seen some good improvements, and the Eurozone is basically back into a net exporter. So the Brics Summit basically starts today in Johannesburg, South Africa, where we are looking at the Brics countries, which is Brazil, Russia, India, China, as well as South Africa, all working together to improve partnerships and cooperation between their economies and looking to move away from dependence on the US dollar. So they're looking to establish financial institutions to replace or compete with the IMF as well as the World Bank. And key developments will be shared as we continue with the rest of the day. Remember, these meetings are basically attended by the heads of state. So the heads of state of the BRICS countries are basically meeting from today. And since journalists are not allowed within these meetings, so we depend on some of the participants basically leaking some information to the press, which can cause some form of volatility, especially if it's significant news in the markets. So this will be a key theme for the day. There will be CBI industrial order expectations for the UK at 1 p.m., existing home sales data from the US at 5 p.m., and of course, the Richmond Manufacturing Index at 5 p.m. So after this, we'll be having 3 consecutive speeches from Fed members. So the first one will be from FOMC member Goolsbee. In this case, I'm trying to open this link here. See which one opens first. Yes. So FOMC member Goolsbee will deliver the welcoming remarks at the Fed recent events hosted by the Federal Reserve Bank of Chicago. This could have some hints about economic policy and, of course, could bring volatility in the markets. So also in the same event, we'll be having a speech from Fed member Bauman. And of course, at 10:30 p.m., we have FOMC member Goolsbee, who is due to participate in a fireside chat about youth employment at a Fed recent event hosted by the Federal Reserve Bank of Chicago. So it's basically the same event, and 3 Fed members basically speaking, which leads to the conclusion that at least we will be seeing some fireworks coming in from this, especially if one or more Fed members decides to make a comment about oncoming policy. This could lead to basically strong reaction in the market. So tomorrow early in the morning, we'll be looking at retail sales from New Zealand, core retail sales. Then we look at fresh manufacturing, PMI and services for a host of economies. So I would say it's an S&P Global Day, where we'll be seeing S&P Global releasing fresh manufacturing PMI and services PMI for Australia early in the morning, then for Japan, then for France, Germany, and the entire Eurozone. Then they'll do the same for the UK at 11:30 a.m. Then later on in the afternoon, they release the same data for the US. So all these is expected to cause some form of volatility. And also remember, the S&P Global also does manufacturing and services PMI for Kenya. So you might also be interested in checking that out. So then, of course, the meetings continue. That is the Brics meetings. So you can see the Brics summit will continue into the second day. Then on Thursday, we'll be having the first day of the Jackson Hole symposium. And of course, while this starts, we'll also be having the third day of the Brics summit ending on day 3. So towards the end of the week, speech from Fed Chair Powell during the Jackson Hole symposium, and of course, a speech from ECB President Lagarde. Before we look at retail sales for Australia, unemployment rate in Japan, S&P CS Composite 20 housing price index for the US, and then housing price index month over month, CB consumer confidence data, and of course the JOLTS job openings. So on the following week, this is when we'll be having the non-farm payrolls that is towards the first week of September. So that being mentioned, among other key highlights in the markets today is that Nvidia bulls pile in after HSBC raises price target. This happened yesterday, where HSBC raised the price target for Nvidia shares from $600 to $780 based on bullish predictions for Nvidia AI data center sales and a significant quarter-over-quarter spike of roughly 29% on 19.4 billion in total sales. So remember, Nvidia is the latest company to join the $1 trillion club. So after HSBC raised the target for this stock, we saw a good rally happening yesterday. And remember, the Nvidia earnings are coming up on Wednesday after market close. So we haven't seen the Nvidia earnings yet. So the stock is up over 200% year to date. So if you look at the year to date performance, it's 228%. So it has basically tripled the investment since the beginning of the year. And of course, the yesterday's performance was really good, being up 8.47%. And in pre-market trading, it's up 1.06%, meaning that it's bound to open at an even higher price than the closing price yesterday. So yesterday it closed at 469.67, and we're expecting an open of 474.65 before we even see the earnings. So this time for Nvidia earnings, it looks like buy the rumor, sell the news, where in this case, people are buying the rumor, expecting that the Nvidia stock will beat its earnings. And immediately after the report of the earnings report, we could be seeing the price pulling back downwards. So I'm not sure, it's only a speculation. So it's a very interesting topic to follow this week. So retail earnings, existing home sales, and Fed speak, how to watch this week. So a big week for the Fed. We'll hear from a number of officials on Tuesday in advance of the Fed's big economic summit at Jackson Hole later this week. Tom Barkin, Austin Goolsbee, and Michelle Baumann are all expected to speak at the different events on Tuesday. The street is waiting for any hints about where rates are headed and the state of the economy. I think we've already discussed that. So also seeing Nvidia and Tesla do some good performance yesterday. So you can see Tesla here. It was up 7%. And of course, year to date, it's up 113.95%. So with the two huge stocks being way up yesterday, it was also a very strong day for NASDAQ. So you can see it was up 1.65%. And year to date, we know that it's up that 7.51%. So remember, in the last 3 weeks, the NASDAQ has been quite bearish. So what we have been seeing is a market correction forming. But yesterday, we saw some form of reversal happening. So this is the NASDAQ and how it formed yesterday. So after open, slightly bearish and then bullish on the London session. New York Open made a big jump up and then back downwards and then continued moving higher. So it was largely a bullish day for the NASDAQ. And today we seem to be seeing a continuation of the same, so which may imply some form of reversal, where the market has been trading in this channel for the last 3 weeks. So now we have very strong momentum upwards. I don't know whether we will be looking to test this area here. So if you zoom in on the 1 hour chart, zoom out, you can see that these are trend line here. This is the direction that the market has been following. Trying to highlight this. So after seeing these, you can see that the market is now currently retesting this area. And now there's a good chance we'll be seeing a strong break or basically a reversal. So it's a key decision point or decision area for the NASDAQ. So if the market happens to breach that area, then we go for long positions. But then if the market is unable to break this area and there's evidence of short selling or short sellers entering the market, then it might be a premium signal to go for a short selling trade. So we saw this happening yesterday. Market gets the trend line, faces challenge breaking and then drops back down. So today it's doing kind of similar of a similar thing. So if we happen to see the same price action, then we might be looking for another short. But it's also important to notice that after the big sell-off yesterday, the market was unable to form a lower low. So the lows are basically the same. Friday and Monday low seems to be the same, indicating a weakness in the bearish trend. So for the Dow, it's the same thing. And now for the S&P 500, if I want to zoom out here, and then I adjust my trend line to fit the previous two swings. These are the previous two swings, this area and this area. Now you can see that there's still more room for upside for the S&P 500. But if the market gets to this area, then we might consider looking for another short selling position. So for now, the bullish momentum is allowable. We can accept that the market may continue moving higher, but once it gets to that area, then we might consider looking for another short selling position. So for now, it seems like an upswing that has a lot of fuel from Friday, then Monday, and now being Tuesday, we are seeing some potential for some further upside. So if you look at gold, we noticed a similar pattern happening here. So gold was basically moving downwards. Everyone was very tired, especially for those of us who are monitoring the situation here. So this consistent momentum downwards was eventually ripe for a bullish momentum trade. So eventually, we started seeing some weakness in the bearish momentum where gold was unable to form lower lows. So from this low, comparing to this other low, we saw that the market was unable to break lower. Then yesterday, we had yet another retest of the same area before the market bounced higher and broke this particular trend line. And if we want to even extend the previous one, which was following this path here, then you'll notice that this too has been broken. And now we expect some further bullish momentum in gold prices. So with two trend lines being broken within a span of 2 days, yesterday and today, Now I expect some further upside momentum to be happening in gold prices. So potentially there's this area here, which is slightly above 1910. So you can see the number of times that the market was retesting this area. So there's this time here and this time here. So unable to break, and now we could be headed to that area. However, the immediate resistance as per right now seems to be this price action level. So pretty much important. The price was going up, failed to break, and now is pushing back downwards. So we can also observe this area here was acting as support. Now it became resistance, and now as the price continued moving higher, we've just retested this area here. The market seems to have been unable to break. So it's also a psychological level. It's 1900 price level. So if prices are unable to break 1900, then we could be headed further back downward to 1896. Sorry, this is the tip here of the NFP earlier this month. So this was the bottom here. So we could be seeing the price going down to 1896, and if it breaches that, then 1892. So these are top key levels to be observing in gold. So this could potentially happen. Try and highlight it here. So after failing 1900, we could be seeing this level as well as this level being retested in gold. So also on the upside, flip side, in this case, I expect a rally to 1910. So we don't know how this will break. So the close of this particular candlestick on the 1 hour chart will be very important in determining the direction. So if the candlestick closes closer to the open or even higher, that will be indicative of bullish momentum. We might consider going for a continuation trade. But then if it closes equal to the previous candlestick, meaning that the open of the green candlestick becomes the close of the red candlestick, then that's a very strong indication of rejection of higher prices. And in that case, we consider the bearish case and go for a short selling position. So the dollar index managed to break this particular pattern here, where we were seeing the market just oscillating within the two trend lines. So eventually made a breakout, pulled back, retested, and kept going down. And now we have a clear direction that the dollar index is now going down this week. So yesterday was a bearish day, and today could potentially be a bearish day. And as a result, we could be seeing some further upside happening in the pound. So remember, we had this breakout from the triangle, a retest and a continuation higher. So we had a major resistance here at around 1.27868. And it seems like the pound is bound to break this area. So remember, on the longer term time frame, we had this double bottom happening here, and now the market is back to the neckline, indicating that this could be the time that the market breaks towards the upper side. So from the forward chart, this is how we had drawn this. So market goes down and then up and then down and then up. So our neckline remains the same at 1.27868. So after completing the pattern, pulled back down, did not form a lower or equal low. So went back up, and now it could be the time that you are seeing the break. So there's a strong potential that the price could break even higher. So a strong pound against the dollar seems playable, with an immediate target at 1.28692. So as for Euro USD, you can see the bullish momentum happening here. So we eventually go to the upper trend line and potentially breaking towards the upper side. Sorry guys, I missed that one. I wasn't sharing the screen then. So I might have to repeat a couple of charts. So apologies for that. So let's get back to it. I hope that everyone can see the screen now. I'm really hoping anyone can respond to this. All right, so thank you, Norbert. for messaging me. Let's get back on this. I know I've covered quite a number of charts. So I'll be starting with the US Tech 100. The Nasdaq is currently on a bearish channel, has been losing for the last 3 weeks. And now we've started the week on a strong positive momentum as a result of the two major stocks in the Nasdaq making a big rally yesterday, which was Tesla and Nvidia. So following the bullish momentum, today we are seeing this continuation happening here. And now we are testing a major resistance price level here. So this is the area that we are basically observing following this trend line to see whether there will be a break or a bounce back downwards. So if the market is unable to break this, then it may be reasonable to look for a position targeting all the way back down, which is last week's low. But then if there's a break upwards, then you go for a bullish position. So we don't know this yet. So we just have to be patient and observe the price action to see the potential for a break and whether it will happen in the nearby. So that's one. The other one is the US 30 made a very strong resistance here yesterday and then dropped to the previous low. So the lows are equal, meaning that there's some form of weakness where the market is unable to form lower lows, which increases the likelihood of a break upwards. So if there is a break upwards, then you go for a buy trade. But then if the market is unable to break here, then we go back to retest the previous low of 34,255. So S&P 500 still quite a distance from the previous upper trend line. So there's still a very strong possibility that the S&P could continue running, eventually get to the yellow zone here, which is a price action level of around 4,450. So we could be seeing the market retest this area here. Also notice how it was playing out as a bottom here before breaking, retesting, and moving down lower. So I hadn't touched on Brent oil, but I touched on gold. So gold has literally broken two trend lines. So for those of us who have been observing the price action on gold, we know that for the last couple of days, this has been a major trend line. And every time the price of gold got to this level, we found some very strong entry points for short selling positions. So yesterday, we had this break and the market pulled back downwards. And if you look at the sequence of lows from the last couple of days, I think this was Thursday, last week, Friday, and then Monday. So we had two bottoms that are equal, and then also another third bottom which was equal, indicating that the market was unable to form lower lows. So as a result, we saw the market breaking out, pulling back, and then continuing to rally. And then today we have had a continuation of the same, where the market has literally broken two trend lines within 2 days. So this trend line was broken here and this right here. So if you zoom out, the other trend line starts from all the way back this is the 2nd of August this year. So this one has been holding on quite well, and the market closed through that trend line as if it was nothing. So what we are seeing is the market getting to a high that was acting as resistance here. So now immediately after the market got here, pulled back downwards. So depending on how this hour closes, we'll have a decision to make. So if it closes near the open of the previous candlestick, the green candlestick, then we know that there's a very strong entry by sellers and the market has reversed. So we could be potentially looking at the market going further back down to retest the 1892 price level or even 1896. On the other hand, if there's strong bullish momentum and the market closes near the open of the close of the previous candlestick, then there's that chance that we'll be seeing a momentum all the way up to 1910 above the psychological 1900 price level. So that's the theory on gold. So we'll be expecting to see how this particular candlestick crosses. If it's strongly bearish, we go down. If it's strongly bullish, then we continue going up. So as for the majors, before we even look at them, we look at the dollar index. So yesterday we had discussed this sideways momentum. So the sideways momentum has been this way along this triangle. And now, after the market broke the lower trend line, you can see the trend line was broken here. The market retested the area and kept going down. And now today we are on course for a second consecutive day where the dollar index is losing. So if this kind of trend continues, then we expect the majors to be strengthening. So we already saw the double bottom formation happening on pound USD. So after this, the market did not break immediately. So this is our neckline at 1.27868. So market pulled back downwards and then back up. And now there's that potential that the market could break this level and continue moving higher. And this basically represents a buying opportunity, especially towards the 1.28692 price level. So this is how it looks like on the forward chart. So there's still that potential that the market could close through and move higher. So for Euro USD, it's a similar formation where the market was consistently moving downwards. And now what we are seeing here is the market starting to change direction. After it broke this trend line, you can see the trend line that we were following. Every time the market got close to this, kept going down. Eventually, it was unable to keep holding the market. So we had this breach happening on Friday. Yesterday, the market accelerated higher, got to the target of this area, and now we are looking to even breach this area. So the next available area to target seems to be around this area here, which was acting as a resistance at 1.09516. So there's still some far more upside for the Euro USD to keep pushing through. So then for USD JPY, we saw the market pulling back downwards and giving us an opportunity to trade along that direction. But now, since you are seeing a weaker dollar index, then we are seeing the market reverse direction here after being unable to breach the previous high, which now implies that the market is weakening, and we could be seeing the dollar continue to lose against the yen, and maybe perhaps even retest the low that we saw on Friday around 145.01. So this seems like the plausible direction towards 145.01. Then for USD CAD, consistent bullish momentum followed by a double top. So whenever you see a double top, it basically takes on an M formation. So it's a swing upwards. The market gets to a resistance level, is unable to break that resistance level, and then gets back downwards. So most important thing in a double top formation is for you to understand where the neckline is. So the neckline is right here. This low coincides with this low. So that's our neckline. So when the market gets back up and forms the other top, then for the pattern to be completed, you at least expect that the market will drop to the neckline. So in this case, the play is the same. We expect the Canadian dollar to now continue strengthening against the dollar and eventually get back to the neckline to complete the double top formation. So in that case, we will be considering a short selling trade, especially considering that there was a previous high around this area here. So this is the potential for the USD CAD. And this is based on a case where the dollar index continues weakening and weakens further against other currencies. So in this case, I expect the double top formation to be completed, perhaps today or even tomorrow. But then we cannot discount the fact that the market could go back up and retest this high again. However, chances are, following this particular trend line, which was pretty solid, I felt this particular trend line was solid for quite a number of days. So having seen this happen, what we are observing here is a market that broke the trend line and formed a low that was equal to the previous low, so unable to form higher lows, went up, formed a high that is equal to the previous high, which basically implies weakness in the bullish trend. And now we start looking for signs of strength in the new upcoming trend. So a high likelihood that the USD CAD will drop back to 1.34959. So for AUD-USD, we had a triangle at the beginning of the week. So this is what we are observing in the market. And now we have a clean break. So there's a strong correlation between AUD-USD and gold prices. So I expect this to play out the same. So some further upside for the Australian dollar against the US dollar. So in this case, after seeing the break happening towards the upper side, so you can see the market is heading straight for the target, 0.64575. So this was always the target. So from here, you can see the target all the way here. The previous bottom is now the previous resistance, or the previous ceiling. Bottom becomes the now new ceiling. So there is a good chance the market will find some resistance here. So if you're already in the trade, just be patient and wait for the market to get to this area. So Next is Brent oil prices. So with Brent oil, this is what we are seeing. So strong momentum last week, met by a reversal yesterday, and now we are seeing prices pulling back down. So we had some news showing that the OPEC countries exported an even slower number of barrels in August. And this basically means that if there is a restricted supply, then there is a more upside pressure on prices. So despite having a very nice run on Brent oil prices, we had the first bearish week happening last week, followed by some strong recovery towards the end of the week. So notice how the market started strongly bearish here, kept going down, but then somewhere within the mid of the week, market changed direction, kept going up and recovered some of the losses, like 50% of the losses. Then this week, on Monday, market opens and jumps higher, but then pulls back downwards. And now we are on course to start seeing the market playing along a trend line that seems to be shaping here on the 1 hour chart. So the trend line is basically showing some form of trend where the market is now showing some slightly higher highs and slightly higher lows. So now we're on a downswing. So the area to observe is around 83.5 or there below, somewhere around 83.388. So potentially for a swing higher. So for now, it seems like the swing is headed down. And maybe once we get to this area, it's time to look for evidence of bullish momentum and perhaps look to enjoy a play back upwards towards the $85.7 per barrel level. So for now, oil seems bearish, but then once we see signs or evidence of bullish entry, then we might consider trading within the new emerging pattern. So as for European equity indices, we mentioned that they are strongly bullish this week. So this is what we are seeing. All kinds of ceilings and trend lines are being broken. So from the French 40 index, we saw it breaking here. So we expect some further bullish momentum to continue. Same case for the Euro Stoxx 50 cash index. So major trend line being broken here on the 1 hour chart. So further bullish momentum is expected in this chart. So this is how the breakout happened. And of course, if you look at the UK 100 or the FTSE, doesn't seem at all bullish compared to the previous ones, but I expect to see some form of correlation for the day. So thank you very much, everyone. Thank you for your time. Let's see what you guys have. So thank you guys for your responses. Apologies, I didn't counter check to see that you guys were seeing the chart until Norbert reached out from a different platform. Nguvu imeisha, yes, it was quite worrying knowing that I was just talking to myself for that period of time without showing you the charts. It sometimes happens to the best of us. Let's review gold. You did that. J scored, very funny. So if you have not covered it, I've just joined now. Also knowing you're a Bitcoiner, which other platform can you use to buy Bitcoin? Apart from the high transaction fee Binance. I've been asking the same question. I think I ran a very open question and thread on Twitter recently. I had a couple of responses. Very difficult to tell which one were the best responses, but the thread is there. You can go check it out yourself. Just check for my Twitter handle, Rufas KE, and somewhere within the week, you'll see the question about, I read it on the weekend, asking people what were their favorite platforms to buy and sell Bitcoin, and we had quite a number of good responses. Nahashon, thank you, Rufus, for the heads up. We now have a bias. Thank you, guys. Thank you. I appreciate everyone in the team for your contributions, for your participation, and of course, for taking your time to listen in. So make sure to share this particular session to other communities, other traders, so that they may also benefit from the same. Remember, there is enough for everyone in the markets. And of course, we know that a new episode of the Bullish Banter podcast will be airing tomorrow. So be ready. So if you haven't checked out the previous podcast, you can just go to FX Pesa YouTube channel and then click on podcasts, and you'll see the most recent podcast episode. Of course, you can use other platforms. You can use Spotify, you can use Google and Apple Podcasts, and that way you'll be able to reach some of the most recent episodes, and hopefully you get to learn something or two from the podcast. So is it possible to a strong rally in DXY at the same time in gold and in some indices such as SP500 and the Nasdaq? Yes, this year we have had broken correlations for quite a period of time. So it's not usual to see the dollar going up and equity indices going up. However, what we have been seeing, especially considering the current monetary and fiscal policy in the US, is that the Fed is tightening policy, which is strengthening the dollar because bonds are becoming very attractive in the US. And all the money is basically ending up in short-term bonds. So people are locking in these positions in bonds short-term in order to take advantage of the high interest rates and the high yields from the bonds. So as a result, less cash is available, leading to a strong dollar. On the other hand, the Fed is overspending. So basically from a fiscal side, the US deficit budgeting is too high. And as a result of that, there's increased stimulus where a majority of this money is ending up in risky assets, such as stocks. We have seen it ending up in Bitcoin. And as a result, we have seen asset prices continue to rise, while the dollar is also rising. So yes, it is very much possible. So you have not responded to the questions. I wonder which other question. I'm just checking to see if there's a question I missed. Yeah, I see there's quite a number on this other side. Yeah, it's quite a lengthy chart. How do you trade GU price heading towards a strong resistance level amidst a weaker dollar? Bullish, I'm very bullish. We have a double bottom formation, which has been completed, and the market is retesting the neckline. So for GU, very bullish. Does Forex cause headache, cause retry? Where, yeah, Forex can cause headache, especially when you bite more than you can swallow. So it's all about risk management. If you're risking a bigger position than you can handle, then be prepared for some good number of headaches. But then if you trade small, trade smart comfortably, then you might avoid all the headaches that you might be on your way. How do you transition from intermediate trader to a pro trader? Rather, which boxes do you have to take to certify you have moved to a higher rank in trading? Consistency is key. So if you have a trading system and you've been trading it, just keep smoothening that trading system. And once you achieve some level of consistency, let's say you've been trading on one account for a year, making consistent profits, then I can guarantee you are a pro trader. So on WTI, I'm observing a bearish move towards 79.50. Is it a feasible option to put a sell position, a short-term position on before the Friday Powell speech? WTI, okay, I normally use UK oil to avoid duplicating the analysis, but from the analysis, I think it should be the same thing. So I'm expecting this swing to complete somewhere around 83.388. So if price keeps going down and gets this area, then this might be my target area to look for a bullish position. So for now, I don't think the swing down is complete. So I expect some further downside in Brent oil prices, and of course, strong correlation with WTI. I expect the same thing. So Bank of Japan has been fighting deflation, not de-inflation, persistently since 90s, which has had adverse effect on Japan's economy. So Bank of Japan is not waiting to see inflation at 3% for longer and avoid falling into deflation. So what the Bank of Japan is looking to achieve is higher wage growth. So the job market in Japan is slightly different from other economies. The culture basically promotes people working in one company for their lifetime rather than changing jobs from one company to another. So this helps them achieve a higher level of specialization of one industry. So while they adopted that culture, it has been negative on the labor wage growth. Since people don't have a lot of options to move around, then companies don't keep raising wages over time. So it becomes quite a huge challenge because you need people to have more wages so that they can spend more and stimulate more economic growth. So as a result of this, the economy has been facing deflation where the currency has been strengthening. But now, recently, out of the quantitative easing program and the yield curve control, they have been weakening the yen and, of course, increasing inflation. They're also experiencing imported inflation because import prices are also rising. So as a result, they are seeing a higher than normal inflation. And this is bound to cause some cracks and at some point may force the Bank of Japan to change its policy. So the most recent action we saw is the yield curve control program, moving from 0.25% to 0.5 and now from 0.5 to 1%. So it basically means that the Bank of Japan is getting a little bit easy with policy. And as a result of this, it could be in preparation for potential rate hikes to control the high inflation. So if inflation is left unchecked, it can get really wild, like a wildfire. So I know they are very concerned about the current 3.3 inflation. So I think I've answered all the questions. So thank you very much, guys. Thank you for your time. And I hope to see you on the next session. So overall bias on the dollar is bullish, right? No, for me, it's bearish. We are on course for the second consecutive day where the dollar is weakening. So remember, the dollar has been really strong for the last couple of days. But for now, what we are seeing is some form of reversal. So while we enjoyed the strong bullish momentum, we can see there is these consolidations. Market is moving sideways, Brics forms another leg, moving sideways, but now the breakout is to the lower side, which basically indicates that if there's another leg, then that leg would be on the lower side. So some form of correction in the dollar index is expected after this strong rally. And as a result, this would basically imply a weaker dollar index. So expect the dollar index to continue weakening, maybe into the second or even that day.